Hey guys, just wanted to do that quick part two that I promised you about who's getting the best mortgage rates. Now, this is about why are people paying CMHC getting the better mortgage rates or having 35% down or 35% equity already built up into the property getting the best mortgage rate. So just a quick recap that everybody thought the only sort of rule changes last year were that people had to undergo a stress test that were putting 20% down or more, which is still the case. However, there's a whole bunch of things that happened in the background. And this is why it's important to speak with a mortgage broker, because people don't realize how that's affecting their mortgage rates and how banks are actually securitizing their mortgage loans. So as a broker, we deal with all the financial institutions regarding banks and credit unions. We deal with monoline lenders, which are just financial institutions that only sell mortgage products, insurance companies that also sell mortgage products, and we're sort of that one-stop shop. But trying to understand what the back-end rules and why everybody's getting quoted different rates and why it might take a little longer to get a rate quote than it used to is because there's basically three types of mortgage loans now that didn't really exist before last year. So the first one is your mortgage insured? Are you insurable or are you non-insurable? So these are the three main things that we're looking for when trying to quote interest rates for a mortgage. So we'll talk about number one. Number one is insured. If you are insured, which means that you are paying CMHC when you're putting a down payment on a purchase, or you're up for renewal and you've paid CMHC in the past and you're just moving from one financial institution to the next. So if you basically have CMHC or Genworth attached to that loan, then you are going to be offered the best rates. Why? The reason being is because the bank gets to have their security 100% backed by insurance, which means that if you default on that loan, they are completely covered to get their funds back. Now, when you're putting that less than 20% down, it's at your cost, the consumer. You get to pay for it, not the bank. So they get their loan totally covered at your cost. The second is insurable, which means that you're putting more than 20% down, but the bank still has the ability to go back to Genworth or CMHC and get their loan secured from the back end. The difference is that they're covering that cost. It's not you covering it. They're paying it in the back end. That's called bulk insurance or portfolio insurance. And as long as they meet the CMHC Genworth guidelines on that mortgage loan, then they still get to have that securitization backed. Instead of giving you the CMHC or Genworth premium, they're actually just going to charge a higher interest rate. Now, the more that you put down, the less risk your loan becomes. So as you put 25% down, 30% down, 35% down, the risk gets smaller, and therefore the cost of that bulk portfolio insurance for the institutions gets less expensive. Okay, so what is a non-insurable loan and who are getting the highest interest rates? So the group of mortgages that we cannot get portfolio or bulk insurance on. So who qualifies under the non-insurable? So one, if you're purchasing over $1 million, you are non-insurable. Two, if you are refinancing, which means you're taking money back out of the property, so increasing the current loan amount, you are non-insurable. You are being priced at the higher interest rates. Number three, if you're buying a single unit rental property, so investors that are all buying, condos, townhomes, single unit rentals are non-insurable, getting the higher interest rates. If your amortization is longer than 25 years, you are non-insurable. So there's a group of mortgages that are unfortunately not being priced the same way as they used to. So to get all the details around all of this and to make sure you're getting the right information, give us a call. We'll be happy to answer any questions. Thanks for tuning in.